So, as widely expected, the U.S. Federal Reserve has now cut its key interest rate for the first cut this year and under the second Trump administration. For more on this, we're joined today by Dr. Greg Buchak, professor of finance at Stanford Graduate School of Business. Dr. Buchak, thanks for joining us today.
Thanks for having me.
So the Fed had been facing economic uncertainty and political pressure ahead of today's decision. What's behind this move, and what does the rate cut say about the current state of the U.S. economy and the labor market?
Sure. So the Fed lowered rates by 25 basis points. Generally, the Fed is trying to fulfill its dual mandate in setting rates, which is sort of balancing full employment versus price stability. Lowering rates tends to accelerate the economy, which tends to increase job growth and employment, but it can also lead to inflation, and the Fed is sort of trying to balance these concerns. So what does it look like in the economy? The employment situation is not great. The latest jobs picture showed approximately no new hiring, slightly higher unemployment rate, and additionally some data revisions from earlier in the year paint a much more pessimistic picture than many had anticipated. Unfortunately, at the same time, inflation hasn't quite come down to that magic 2% level that the Fed would like to see, but sort of given that the fact that the Fed lowered rates does suggest that concerns over the labor market kind of won out, and that was broadly in line with expectations. Now, sort of a big theme lately has been political pressure on the Fed. Typically, the elected branches of government want the Fed to lower rates, so that kind of increases economic growth. And in particular, Trump has really been pressuring Powell to lower rates. And notably, as came up in the report, one of the dissenters in today's decision was a brand new Trump appointee to the Fed board who wanted to lower rates by even more than 25 basis points. Now, like the Fed, Powell in particular, they're extremely sensitive about not wanting to give in to political pressure from the executive branch. History shows that when a central bank loses political independence, very bad things like hyperinflation tend to follow, which paradoxically can increase rates at the long end of the curve, which matters for government borrowing and even for households who would like to get a mortgage. Now, Powell has done a good job so far in holding the line, but there is some concern down the road that as more Trump appointees kind of roll onto the FOMC, there could be some loss of independence.
I see. And rates are now at their lowest point since November 2022. And the Fed said it would cut rates twice more this year. What economic impact will this have on the global economy?
So I really think of kind of three main things. First, the U.S. is just a very large economy. So to the extent that this does spur more economic activity, more spending, more investing from Americans, that's going to have a direct positive effect on sort of global trade, other things equal. Now, second, lowering rates tends to depreciate the U.S. dollar because sort of what happens is foreign holders of U.S. securities tend to sell those assets and buy higher yielding foreign assets. Now, there weren't big moves today in the currency market because the rate cut was largely expected, but over the long term, dollar weakness tends to make U.S. exports more competitive and other countries' exports less competitive and hurt tourism outside the U.S. Now, the third thing, U.S. assets, particularly U.S. government securities, are very widely held globally. And these securities are close substitutes for other government bonds. So as U.S. rates fall, that's going to naturally exert some downward pressure on other assets.
I see. And speaking of foreign assets, some Fed members have reportedly raised concerns that Trump's economic policies, like tariffs and a mass immigration raid at a Hyundai plant in Georgia, could push inflation back up. What's your take on the economic risks tied to the mass detention of Korean workers?
Yeah, so what happened there was really terrible. It was terrible for the workers affected, terrible for their families, and frankly, terrible for the U.S.-Korean alliance. Even selfishly, from the perspective of an American, it really does undermine U.S. economic interests. So the U.S. would benefit a lot from having that plant operating in Georgia. It would help in terms of jobs, it would help in terms of manufacturing, it would help in terms of technology. And sort of longer term, it undermines the trust that Korea and other allies can place in the U.S. For this and future economic cooperation. So, ultimately, if this impedes investment in manufacturing in the U.S., reduces international trade and so on, it's going to feed back both as higher inflation and higher unemployment. Really, at the end of the day, it just seems like a sort of senseless loss for both sides. I hope it can be straightened out quickly. A lot of policies that are coming out of the Trump administration really do seem sort of nonsensical, even from purely selfish U.S. economic perspective.
I see. All right, Dr. Buchak, I'm afraid that's all the time we have for today. Thank you so much for your insight. We appreciate it.
Thanks for having me.